people go to Japan because of, number one, good food and cheap yen. Is that really the major factor?
For sure, the value for money that people are finding in somewhere like Japan makes a lot of sense. And in fact, those sort of questions that you're mentioning are exactly the sort of reasons that I'm actually in Tokyo talking to clients, whether it's retailers or financial institutions. And even around the region, we get a lot of questions thinking about how to promote more tourism. And of course, Japan comes up as the big success story. Now, some aspects of this, like the level of the exchange rate, are clearly playing a role in making Japan such an attractive destination. It had more than broken even on its 2019 levels for inbound tourists, even at the end of 2023. So we're well above where we had been pre-pandemic versus other markets that are just about breaking even over the last few months only. Now, the key other thing, though, as you mentioned, is that it is a great destination for the experiences side, for food. In the winter time, of course, a very popular destination for skiing travel, but also it's to do with the retail therapy because of the relatively cheap level of the exchange rate.
Yeah, and that's actually a good point. And I think that's one area where Hong Kong is sort of losing its competitiveness, because it used to be all about shopping when it comes to tourists to Hong Kong. But I think that is changing that to a degree. So perhaps Japan is taking some share of that. But I do want to broaden out here before we get to Hong Kong here. This changing tourist behavior in terms of, we talk about the trade and the tariff uncertainty and how the countries' relationships are changing. Do you think that is one of the contributing factors why Asia is an emerging travel destination for this year?
I don't think that we should read too much into the latest news related to the tariff situation when it comes to what's going on, at least right now, with travel, because it's so focused on the good side of the economy. If anything, I think you'll see even more of the promotion of tourism and travel all around the region as an extra way of earning more foreign exchange in a world where people may be more concerned about the global goods trade environment. Instead, what we think is going to be the story, and I think you alluded to it with that competitive challenge that, say, Hong Kong has, is that consumers are looking for really good value when they're traveling as well as when they're spending wherever it is that they go. They're finding it for sure in Japan right now. But we're also noting that there's even more of this preference for wellness type retreats, for going to places you've not been to before, for going to even national parks and getting to the great outdoors and being able to really just switch off from the very intense sort of lives that people have been leading. And so in that way, places like Japan that have so many other things to offer beyond the bustling cities, that I think is going to be the long-term story too, because there's a few destinations that have been taking in the lion's share of the tourists. And what we're really seeing is even more of a preference to go to places people had not been previously. And in economies like Japan, as is true for places like, say, New Zealand or even Australia, there's a lot of other places for people to choose from for where to go that may be that path less trodden. And we think there'll be plenty more of the interest in doing that. Now, in Asia Pacific also, it's not just about the China rebound of international travelers that is still ongoing, and it is the biggest outbound traveler market yet again. But the longer term story is also where the growth will come from in international travelers is also really an Asia Pacific story when you think about how the projections are over the next 10 and 15 years for what the India traveler will be doing. And of all the big growth of the destinations that we've been seeing, travelers coming from India, for example, into Vietnam was even a big story even last year. And we think that the other key thing will be for a lot of destinations to make sure that they're catering for tourists that are coming in from markets that may not have been such a big story 5 years ago, but is the really strong growth story for the next several years and well into the 2030s.
You know, David, it's really interesting to hear you say that, because I was just back from a travel conference yesterday in Bangkok where a lot of people are talking about and modeling their businesses on those entry-level travelers that are expected to come on board in the next couple of years, saying these people largely have been ignored with everybody going for the affluent travel, that there's a real opportunity here. But in terms of, we talk about value, is Japan the value that it once was? We see the yen strengthening. We know hotels cost more because with demand, supply goes down, costs go up. Do you expect to see Japan on next year's list from Mastercard Economic Institute?
Well, it's an interesting point that we actually decided in the 6 sections of the report that we just released that's on our website now. We actually had one dedicated to just looking into this exact type of issue. And we linked it with the role of the exchange rate and seeing which particular country of origin markets were driving the most growth in tourism demand purely because of the exchange rate. We sort of tried to identify and separate out that effect. And we found that around the Greater China region, that was where we saw most sensitivity to the exchange rate in terms of demand for travel to Japan. But we also looked into the direct corridor between Singapore and Japan, and we looked at the move in the exchange rate and the role it plays in lowering the travel cost index that we created for this report. But as you mentioned, it's not just about the exchange rate. How much does the hotel cost? How much are the flights? And in many cases, and we've seen it in the Singapore-Japan case, we have seen that rise in the cost on the hotel as well as on the flight. But so far, it has been tempered by the exchange rate moves. But of course, we now are around 40% weaker on the Japanese yen against the Singapore dollar if you compare to the pre-pandemic era. If we're in a world where actually the US dollar is in a major downturn, if that really is the big trend over the next, as you mentioned, 12 to 18 months, then that attraction would be likely ebbing away. And actually then there'll be more focus on the relative cost of going to alternative places in the region. So those that have been missing out the most, and I think one of the main ones you mentioned was Hong Kong. Singapore has been doing okay for some corridors, but there's more to go there too. They could start doing a little bit better at the expense of, say, Japan, that has been really zooming ahead of everybody else so far. But I think really the exchange rate side is relatively out of the hands of individual cities, for example. Just finding all those new cool things to do, being featured in TV shows is certainly playing a major role. And actually in the report, we show where major growth has come from for outbound travel from various markets around the world. And in Japan's case, outbound travel to an individual location in Korea, Gyeongju, actually was particularly strong, and the main driver seems to have been a Netflix TV show.